Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you about the contingent assets and contingent liabilities. In this video, few questions like true or false and MCQs I am going to explain on the term contingent asset, contingent liability. Because in examination, in CA Foundation entrance examination, I have seen many times they have asked these short questions. You have to identify whether it is a current asset or current liability or a provision. So watch the video to get the complete grasp on these topics of contingent assets and contingent liability. So before starting the explanation of these questions, take a note of these points. Take a screenshot of these points, then I'll explain. Now, first of all, we have few questions, true or false. You have to identify. Listen carefully here. A contingent liability need not be disclosed in the financial statements. It is false. The contingent liability must be disclosed by the approving authority in the report. It should not be recognized. It should not be adjusted in the financial statement. But contingent liability should be reported in the financial statement by a note by the approving authority. So first question is false. It is asking it need not be disclosed. It is to be disclosed. Then second, a provision fails to meet the recognition criteria. No, sorry. A provision should be recognized, whereas contingent liability will fail to meet the recognition criteria. Contingent liability will fail to be recognized in the recognition criteria, but a provision will be recognized criteria. So it is again a false. Next, a claim that an enterprise is pursuing through legal process where the outcome is uncertain is known as contingent liability. A claim that an enterprise is pursuing, that means a business has put a claim against another person. So it is a contingent asset, not a contingent liability. Because if we are succeeded in this claim, some economic benefit we will get in future. So by putting the claim against another person, that means we are going to get some benefit. It is called contingent asset. But here it is given, it is called contingent liability. No, it is false. It is a contingent asset, we can say. Next, when it is probable that the firm will need to pay the obligation, then this gives rise to contingent liability. What it is saying, when it is probable that the firm will need to pay, when it is sure that definitely this liability will going to happen, they should make a provision. It is not a contingent liability. When it is not probable, when it is uncertain, which depends on the happening of an event, then it will be called contingent liability. Here when it is given that when it is probable that the firm has to pay, it is not a contingent liability, it is a provision. So here it is false. Next, last one, present financial obligation of an enterprise which arises from the past event is termed as contingent liability. Present financial obligation which has arisen from the past event, it is called a liability. It is not called a contingent liability. Because it is the present obligation. Simple example I can give you like this. In the past we have purchased the goods from a supplier, creditor. So on account of the past obligation, there is a present financial obligation. We have to pay the amount to the supplier. It is not called a contingent liability. It does not depend on any condition. Due to the past event, now we have a financial obligation to pay. It is called a liability. It is not called contingent liability. So again it is false. The correct answer is it is a liability. present financial obligation which arise from past event, that is a liability. So we have completed the true or false. Now few MCQs, multiple choice questions. 3 answers are given, one of which is correct. Identify the correct one. Contingent asset usually arises from unplanned or unexpected events that give rise to. So when then contingent assets usually arises, what will be the consequence of this contingent asset? The possibility of an inflow of economic benefit to the business entity, the possibility of outflow of economic benefit of the business entity, either A or B. See here. In this case, in contingent asset, there is a possibility of cash flow. There is a possibility of economic benefit in the future. So the possibility of an inflow of economic benefit is the right answer because it is a contingent asset. If it is a contingent liability, then it is an outflow. There is a possibility of an outflow of economic activity. So this is contingent liability and this is contingent asset. So here the answer is A. A is the correct answer. The possibility of cash inflow. Then second one, if an inflow of economic benefit is probable, then the contingent asset is disclosed in the financial statements, in the report of the approving authority, or in case of cash flow statement. First of all, whenever there is an inflow of economic benefit is probable, that means it is a contingent asset. When the economic benefit is probable, then a contingent asset is disclosed. Where? It should not be disclosed in the financial statement. It should not be disclosed in the cash flow statement. It should be disclosed by the report of the approving authority, just like board of directors. In the board of directors report, it should be mentioned that this is a contingent asset due to which there will be economic benefit to the enterprise. So B answer. In the report of the approving authority, it should be disclosed. C. In the case of dash, either outflow of resources to settle the obligation is not probable, or the amount expected to be paid to settle the liability cannot be measured with sufficient reliability. What is this in dash? In the case of dash, is it a liability, provision, or contingent liability? It is a contingent liability. In case of contingent liability, either outflow of resources is not certain. Whether outflow will be there or outflow will not be there. And secondly, the amount cannot be accurately calculated. So if these two conditions are there, whether the outflow will be there or not, how much would be the amount of liability? If both these are not known, then it will be treated as a contingent liability. So in case of contingent liability, what will happen? Either outflow of resources to settle the obligation is not probable. How much would be the outflow is not probable. And secondly, amount expected to be settled, the liability cannot be measured with sufficient accuracy. We cannot be able to calculate. It's a current liability. So 3. Fourth one. Fourth MCQ. Present liability of an uncertain amount. Present liability of an uncertain amount which can be measured reliably by using a substantial degree of estimation is termed as. That means it's a present liability of uncertain amount. Present liability of uncertain amount which can be measured reliably by using substantial degree of estimation. By applying substantial degree of accuracy, we can be able to calculate the amount. That is called provision. Just like provision for taxation. We don't know how much would be the liability of taxation, but with substantial accuracy, we can estimate. So estimation of tax liability is not a contingent liability. It is a provision. The right answer is provision. Next one. In the financial statement, contingent liability is recognized, not recognized, or adjusted. the contingent liability should not be recognized in the financial statements. It should be recorded, it should be disclosed only in the report, but it should not be recognized in the financial statements. Next example, 5 MCQs over. Now few examples of contingent liability. In examination you may be asked regarding, give some examples of contingent liability. The contingent liability are product warranties. In many cases, the companies will give product warranties to the customers. There is a possibility that customers will return the goods, the customers will complain against the company for warranty. So there is a possibility that a liability will arise in future. That is, product warranty is a contingent liability. Next one, changes in government policy. Due to changes in government policy, definitely there may be a liability with the company. It is a contingent liability. Next, foreign exchange fluctuations. Many multinational corporations, MNCs, will deal in foreign currencies, and the foreign exchange rate will not be same, it will fluctuate. So due to the fluctuation in the foreign currency rates, there may be a liability to the company, and that is a contingent liability. Next one, pending cases in a court of law. Many cases, a business is facing court cases. In that court cases, there is a possibility that the business may have to pay a liability. It's a contingent liability because it depends on the verdict of the court. It happened due to the past event, and its occurrence will depend on the event which is uncertain. Then lawsuits of patents. Many times a patent right is violated. In that case, a court case may be put. A company has to pay some damages for violation of patents. And bank guarantees. Many a times a person will give the guarantee to the bank. In that case also a contingent liability will arise. If the person who has taken the loan has not paid the loan, the person who has given the guarantee has to pay the amount. Contingent liability. The liability in respect of bills discounted. A business may discount the bills of exchange with the banker. In that case, the person who discounted the bill will have a contingent liability. If the drawee fails to honor the bill, in that case, the person who discounted the bill has to make the payment. It's a contingent liability. Last one, claims against the enterprise not acknowledged as debt. Sometimes a claim has been lodged with the company and the company has not yet acknowledged the debt. So it is a contingent liability. So these are the few examples of contingent liabilities. So these two videos, last video I have explained you the meaning differences between current assets, contingent assets and contingent liabilities. And in this video, few short questions, true or false or MCQs and examples I have explained. And this much is enough for CA Foundation students. But remember, always while watching the video, I suggest you to maintain the notes. Whatever I'm explaining, just to keep a running notes, then definitely you can gain a lot of knowledge. You can get a lot of command on this concept. Confidently, you can face the examination. So I wish you all the best for your preparations of this entrance. So if you are satisfied, give a like to the video, share my channel, subscribe if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, the next chapter number 5, will start in the next video.